Change is frightening. That's a truism. That whenever things change, our reaction as human beings is always going to be to reject it, to deny it, to keep it from happening. And yet, change keeps happening, and we have to adjust. So what's happened in 2024 is that we have been confronted here in the last few months with tremendous change. We don't even know how far the change is going, but certainly politically, geopolitically, we've seen amazing change. And now, instead of reacting to it, we have to adjust. We have to look at where it's going to impact us and where there are great new opportunities. What surprises me as we look at 2025 ahead of us is how many opportunities there are, even in what seems to be a somewhat frightening and uncertain landscape.
You are listening to the AFIRE podcast, real estate, technology, cross-border investing, and the opportunities of a changing world. Let's start a conversation now.
As we're trying to figure out what's going to happen in 2025, I'm really excited to be able to sit down with my good friend, Jim Costello. Of course, everyone knows him. He is the Chief Economist for MSCI Real Assets, a frequent speaker at AFIRE and other association meetings, and someone who always has a pretty good, measured, and data-driven view of what's going to happen in the U.S. real estate market, especially cross-border investment, which is very important to us at AFIRE. So, Jim, thank you for joining me on the AFIRE podcast.
Always a pleasure to be with you.
What I would love to start with is, what do you think may surprise us in 2025? It seems like it's all surprise right now in terms of the new administration in the United States and new administrations potentially elsewhere in the world. What do you think may surprise us about the first year of the Trump administration and its impact on commercial real estate investing?
Yeah, the first thing is, if people are not taking kind of a dispassionate view and just stepping back and just taking a full look at the range of potential changes, they're going to be shocked and surprised. Some folks coming in who are pretty scared, and suddenly there's noise of change in tariffs. What does this do to trade? What does this do to real estate demand? And concerned about more inflation that comes from it, spinning up a number of negative stories. And those are real concerns. But any policy change can cut two ways. There are other things that investors are, other sets of investors are excited about potential tax policy changes, about potential reduction in regulatory burdens. So you can't just look at only a negative and think the market goes that way, or think at only the positives and look that way. You need to take a dispassionate view and step back and look at all of it. If you're only looking at one little slice and how it's going to be beneficial or problematic for you, you're going to be surprised because you're not getting the full picture. And every policy change that might come always cuts multiple ways.
Now, thinking about going forward, 2025, where do you think there might be some investments or plays that people can make that may be surprising to the upside?
Yeah, there's been this issue, a conference we were just at, you and I, up in Canada. Everybody was talking about beds and sheds, and so much so that one panelist in an event was like, I need to say something other than beds and sheds. But it made sense for a while that institutional money was going into just these narrow sectors because it was a period of time of investors just seeking safety. And, those had more predictable income performance and the lower CapEx relative to the income those generated. And so those were things that were more attractive for those sectors. But so much capital flowed into those that now cap rates for some of those sectors are lower than offices, which in the past was a reversal. Office, particularly CBD office, were always lower cap rates. Investors are ascribing less risk to those assets. So that's kind of changed, but it raises a question: how much of that lower risk from the CapEx spending and higher NOI growth, how much of it has already been priced in? And it is the case that we've seen tremendous declines in CBD office pricing, but those declines are starting to moderate. And purchases are starting to happen again for some of those CBD office buildings. It's not really coming into the institutional money yet in the same way that you may have seen in the past with the fund managers in the U.S. and the cross-border investors coming in. There's a few deals that have happened, but still a small number, but it's growing. And that's an important story because it's starting to turn the corner. But so far, what's really happening is a lot of private money jumping in there and taking a risk where the fund world can't start yet. I mean, there's a reputational risk that's limiting capital flows into something like CBD offices, because if I am a fund manager raising capital from pension funds and sovereign wealth funds, the reputational risk of putting the money to work a year or two too early as asset values are still falling, maybe I don't get another fund going after that because people don't want to come in because they know I misperformed on the last one. So until they see that enough capital has gone in to make this a stable market, they're not going to go there. But we start to see that with the private money. So I wouldn't be surprised if we start to see more money from the institutional world in the year ahead.
So office may surprise us in 2025. That's an interesting notion, but not one that I'm not hearing from a lot of people. I mean, there are people that are saying, yes, office may be the time now to start stepping in, take advantage of those devaluations and move forward with it. We'll see what happens. Now, another concern that came up, I mean, for the first time that we've been asking this question for a couple of years about migration, and the U.S. has had a very steady migration pattern for a few decades of growth in the Sun Belt and some shrinkage to the north and around the Great Lakes, et cetera. I've asked about, is there a reversal in the next 10 years possible? A softening of growth perhaps in the Sun Belt and an increase of growth to the north. And most respondents said no, they don't see that. But for the first time in September, when we asked that question, a majority of members, 80+% of respondents to that survey, said they anticipate some change of some kind in migration patterns in the United States. Do you think we're going to start to see some shifts in that in the coming year or so that may surprise people?
There's a lot of things to take into account when thinking about migration patterns. The pattern that we've seen traditionally is people retiring from expensive northern states and moving down south to lower cost states that had more favorable income tax kind of setups. So that you sell an expensive house in New York, buy an inexpensive house in Florida, and live on your retirement income and not have to pay a state tax. Now you're paying higher property tax, but if you have a lot of assets, then maybe that's more beneficial for you for that move. But there's been a number of challenges to that kind of model, including the fact that we just have had so many people move in to some of these locations without a corresponding increase in construction and number of housing units. Places in Florida are more expensive than the past. So it's not as easy for people to buy buildings just because and buy a house down there just because it's a cheaper location. Even if they have a tax benefit, the cost of the homes is higher. We've been limiting construction. We're not allowing the free market to build what it wants. There's too much restrictive zoning. And so that helps to limit some of the population flow. There's still a demographic force behind population flow with people aging out of the workforce and getting to that point of life where it's not fun to shovel the sidewalk in winter and Florida looks fantastic when it's cold and snowy outside up north. And that's going to continue. But then there are forces detracting from that in terms of the relative cost structure is not as favorable as in the past.
And certainly you have additional costs that people were not accounting for years ago. increase in insurance costs, and even the lack of availability in some jurisdictions of insurance, therefore denying people the ability to have a mortgage.
And that is no cost to worry about. And that's
it's significant.
Yeah.
So again, I think that a lot of what's driven that, or has given fuel to that migration pattern, has been the relative cost differential between the North and the South, and that may be gone. I mean, it's still expensive in the North, but now it's expensive in the South as well. I wonder what kind of impact that's going to have, and when we're going to see some shifts. I mean, obviously, the migration to the South is not going to end, but the question is, what level are we going to see going forward?
Yeah, the level going forward, the mix between it all, it's hard to say. But I think people need to focus on, again, you need to take a broader view. If I'm pitching a fund focused on housing in Orlando, I'm focused only on the upsides around demographic change and the fact we have low property taxes, no income taxes in Florida. But then there are things detracting from that. And so people have to take a much broader view to get the whole picture.
Well, I wonder if one of the headlines for 2025 is going to be nuance wins out, paying attention to the details.
Well, it always does pay out, for someone who dives into the gory details of stuff, but it's not a sexy title of, look at the details. That's, it's easier to sell a dream of painting a big picture.
Absolutely. Well, I guess that means the turtle might be boring, but the turtle does tend to win the race.
Yes.
So that's pretty exciting for a lot of investors. Anyway, well, thank you, Jim, for your insights on 2025. We'll see what happens. We'll see what surprises us as we go forward. Thank you so much for your commentary.
Hey, thank you for the time.
You have been listening to the AFIRE podcast. Remember to subscribe on your favorite podcast subscription service, such as Apple, Spotify, Google, Stitchers, and others. AFIRE is not engaged in providing tax, accounting, or legal advice. No content in this podcast is to be construed as a recommendation to buy or sell an asset. Some information included has been obtained from third-party sources considered to be reliable, though AFIRE is not responsible for guaranteeing the accuracy of third-party information. The opinions expressed are those of its respective contributors and sources, and do not necessarily reflect those of AFIRE.